Hello. Perfect. Hey guys, thank you so much for coming. It's a pleasure to have you all. I think you're going to have an interesting workshop today. We have several tracks. I'm going to cover each and every one of them so you can get a sense on how it will evolve throughout the next 2 hours. We have, I think, a nice mix of people from traditional finance and DeFi, so I think it kind of adds the right flavor to the conversation. And it's a pleasure to be here at DevCon and explain how, especially TradFi is adopting and incorporating the core of its tech stack, EVM technology, Ethereum technology. So today, the agenda is this one. So we're going to start with a few opening remarks. We're going to cover the landscape, set a little bit of the tone. Real quick introduction, but I think the interesting part will be the panels. So we're going to have a first panel with people from the industry, both of the tech part and the financial industry, having a deep conversation on how global projects are leveraging this type of technologies and blockchain at its core. Then we're going to have some highlights, some case studies, and we're going to showcase some companies that are building and doing. So kind of helps to illustrate how the industry is moving forward. And finally, we have a last session that I think everybody here already heard about. A lot of industry and enterprise efforts, more on the permissioned side of the fence, right? But there are a lot of opportunities, and I think having a global rail as Ethereum and public and permissionless blockchains would be very powerful, and how this industry is moving to permissionless innovation and public ledgers. All of these 3 panels we're going to be covering for around 30 minutes each. And we have 3 panelists and 1 moderator. And afterwards, when you wrap up with the 3rd panel, we're going to have some Q&A, some highlights as well, and then we'll say goodbye. But thank you so much for coming here. I think it will be quite interesting to get your inputs as well. So please do engage. Even though we have a Q&A session, if you feel like contributing, raise your hand at some point. We'll be happy to welcome any kind of questions and inputs. I think it's kind of like a broader discussion that we're having with everyone here today. So starting with the opening remarks, maybe a little bit of background on myself. I was formerly at the TradFi side, let's put it like that. I was working for the Central Bank of Brazil for a lot of years. I was the project manager and the deputy head of the Brazilian Central Bank Digital Currency Initiative, which is called DREX, and it's using EVM technology to put together and to put on top of the whole banking industry and the whole capital markets industry on these next-gen rails, these blockchain-based rails. Currently, I work for Valor Capital. I'm leading investments on blockchain, emerging technologies more broadly. It's a venture capital firm based in the US with a lot of coverage on emerging markets, having invested in companies such as Coinbase since 2014, Circle, Celo. We invested in Dapper Labs Flow, and almost 30 companies that are blockchain related out of 130 portfolio companies. Maybe half of them are fintech, so I think it's nice to bring this kind of overlap between blockchain and fintech. But just to set the tone, I think I'm going to be spending a few minutes here. This is actually what's happening and what has been happening for a long time in the financial industry. I think this movement from physical with payments, with actual money, with systems that are actual physical systems, like such paper, fax, the traditional financial industry that sometimes still ongoing, right? And then we have this kind of next chapter where the industry is moving to digital. And I think the current and very expected next step is the movement to blockchain-based rails, right? So I think an important thing to highlight here, there's like a new mindset. It's not only like technology, it's a new opportunity to leverage permissionless innovation, a tool set and a smart contract layer to really add efficiency, programmability, composability, everything that you see usually in DeFi. So there's definitely an opportunity to reinvent the financial industry here. And one interesting part is also when you think about the settlement process, when you're exchanging assets for payments or payments for payments or assets for assets. So the settlement part, when you think about traditional finance, you have kind of two steps, different steps that are apart. So you have the messaging part, the information, and the actual settlement going on in different dimensions. But with smart contracts, you have like everything all together, right? So you have the atomic settlement, you have the information, and the exchange of assets going in the same moment, which kind of unlocks a lot of opportunities as well. But just also to highlight how big is this opportunity, I think you can see this from different dimensions as well. You can see both from the asset dimension. So when you think about tokenization of real-world assets, it's a massive, massive industry. Currently, when you think about public blockchains and real-world assets, mainly stablecoins, which are very big by now. But if you think about traditional finance, it's a multi-trillion-dollar industry, right? So you're going to see probably some tailwinds that are coming from both infrastructure, such as blockchain-based CBDC initiatives, and also regulatory tailwinds, kind of like pushing the market in this direction and helping incorporate blockchain technology in the core of the financial industry. But also, there's an opportunity to optimize the financial market infrastructure, so the back end, the wholesale settlement, the instant payment settlement, with new technology. So think about a little bit of like a type of cloud migration that the banks are kind of like going through still. But we're going to have like a next leg when banks are actually incorporating at the core of the stack blockchain technology. So going a little bit further and double clicking, as I mentioned, we just like in the very beginning of the journey. You think about stable coins. We have something a little bit over the $100 billion. You think about real assets, we're much lower. I think we have a little bit around like $13 billion tokenized. But if you look across different asset classes here, you see that there are like a much, much bigger opportunity, and that regulations coming together, the banks, the financial institutions are getting more used to the technology and more open to adopt. So it's just a matter of time that this multi-trillion-dollar business will actually like move to this new tech stack. And it's, of course, when you think about the global figures, they are huge. But even like just to illustrate, I'm highlighting here Brazil, it's also many trillions of dollars only in a specific country. So this will be a massive shift for sure. And the other dimension that we had in the other slide, I think, is this opportunity for enterprises to migrate to a blockchain-based tech stack. The same with cloud. There will be plenty of opportunities for service providers, for technology providers, to help the banks navigate in this new ecosystem. So get ready for an interesting journey and a huge opportunity for many companies that are working and building in this industry. And this is actually, I think, kind of like a recent trend that you all here have been seeing, especially with the big FIs, right? Thinking about public blockchain rails as perfect distribution rails for tokenized real assets. So we have BlackRock tokenizing money market funds, UBS most recently, other big FIs as well in their journey for a longer period. But I think one point that maybe is not too discussed is that central banks are actually pushing for this technology. So these central banks, for instance, are incorporating in the core of the financial industry EVM-compatible infrastructure. So if you look across all the banks building on top of blockchain rails, usually 90% of them are using EVM-compatible technologies. And if you look across all the CBDCs that are thinking about tokenization, not only payments, I would say that also more than 90% of all the initiatives are EVM-compatible. So this is how powerful Ethereum EVM is and how much it is contributing to the industry and the traditional finance industry in this journey. This is a personal belief here. I think at the end of the day, we're going to have DeFi protocols, money Legos, a lot of the innovation that's coming from the permissionless part of the fence, right? Public blockchains really helping traditional finance creating and innovate, because if traditional finance is implementing EVM-compatible rails, EVM-compatible infrastructures, it's very easy to leverage the open source innovation, to leverage the tooling, to leverage the money Legos and the DeFi protocols, and to incorporate in the core of their tech stack. So there's definitely like a lot of contribution, but there's definitely clear ambition from specific central banks to interoperate these rails with public blockchains and Ethereum more broadly. So I think this is a discussion that we're going to have here, and we'll go deeper on this. And I think this is a little bit of what this session is all about. And finally, just to wrap up this brief overview, this is a little bit the evolution. So people usually don't know too much about how settlement systems evolve. But if you look back, central banks and countries in general, they have a system for wholesale settlement that's called RTGS, Real-Time Gross Settlement System. It has been implemented since 1980, so a lot of years ago. And by now we have almost like 80% of all the countries with live RTGS systems. But it's a legacy infrastructure. Most recently, we have some central banks implementing instant payment rails. We have Pix in Brazil, UPI in India, Code in Mexico, Fast in Singapore, so many instant payment systems. But we are in the middle of the journey. We have by now a little bit over 30% of the central banks and countries implementing instant payment rails. And we're in the beginning of the journey with a few countries like Brazil with Drex, we have Ensemble in Hong Kong, we have Singapore experimenting a lot with Ubin and Guardian. You have projects with the RBA, the Reserve Bank of Australia, with South Korea, and the Middle East as well. So there are definitely like some countries focusing on putting together new rails which are EVM compatible for broader tokenization of the economy. So we're going to see these trends colliding, and public blockchains and open source and permissionless innovation contributing to this other part of the story. And at the end of the day, I think in the long run, you'll be seeing these networks merging at some point. But it takes some time for this to be implemented on a global level. You have these first few countries that implement those rails, but it's a matter of 10, 15 years to have like a global coverage. And we are just like moving to this current phase of blockchain-based settlement systems. So I would like to invite the first few panelists here. We're going to have a first session on TradFi going on FI, so we're going to have Daniel Marquez moderating, Hart and Sophia and WikiU as well participating, and I'm going to ask Daniel to introduce the panelists and introduce himself as well. Thank you so much.
Thanks, Bruno. Hello, everyone. My name is Daniel Marquez. I'm the co-founder of Koyamaki Ventures and venture executive at Amfi, where we're revolutionizing capital markets using blockchain technology. We have an amazing panelist here today that have a wide berth of experiences and backgrounds that will talk about the topic today, which is TradFi going on DeFi. We have Sophia Lopez, the founder and president of Kaleido. We have Hart Montgomery, the CTO of Linux Foundation Decentralized Trust. And we have WikiTo, executive director at JP Morgan. I think I gave a brief intro, but I'd love for the panelists to introduce themselves a little bit more on their backgrounds and kind of what they bring to the conversation today. So we'll start off with, I guess, Wiki.
Yeah, thanks everyone. WikiTo over here. So I'm from JP Morgan in a unit, what we call Kinexys Digital Payments. I look at the business architecture for what we are doing over there. So essentially the use of blockchain for payments. We do about $1 billion in daily value of transactions. I'll probably share more during the session itself. And yeah, thank you.
Sophia Lopez, I'm one of the founders of Kaleido. We're just celebrating 7 years, going into our 8th year now, and we're a Web3 platform. We work really focused on enterprise, so providing Web3 technologies at scale, performant, highly regulated spaces. We run all the open source protocols that enterprise wants to use. They're always adding new technologies. And prior to Kaleido, I had launched the IBM blockchain platform with Steve was co-founder of Kaleido with me. So we brought 2 years of learnings from like the early days of enterprise blockchain back to 2015 into what enterprises really need, a full stack of plug and play components and capabilities, and that's what Kaleido offers.
Hi, everybody. I'm Hart. I work for the Linux Foundation, where I work as the CTO of Linux Foundation Decentralized Trust, which incorporates a lot of Hyperledger, and the ED of the Post-Quantum Cryptography Alliance. I've been at the LF doing open source for about 3 years. Before that, I worked at Fujitsu, where I did blockchain and cryptography research. And before that, I did a PhD at Stanford in cryptography, so I have a background in academia, I guess.
Awesome. Thank you so much, guys. I guess my first question is going to be for Wiki. Could you please expand and explain Kinexys, which was just rebranded from Onyx, and its role in the global payments and assets tokenization?
Yeah, sure. So Kinexys is really, so maybe just a bit of a background as well. I mean, JP Morgan, we are one of the largest US dollar correspondent banks in the world. So essentially what we do is we help our clients move funds when you are doing, so you know, you could be banking with any of the local banks in your different countries. If you are moving US dollars, there's a very high chance that ultimately it's flowing through JP Morgan. So within JP Morgan itself, what we were doing is we wanted to look at, you know, how can we better make use of new technology, essentially blockchain technology, and really the concept of shared ledger technology. So what we did was we built a blockchain-based payment systems. We have been live since a couple of years back. We were probably one of the earliest banks to be live, like transacting with real value at scale using blockchain. So we are built on Quorum. Yeah, Sophia probably have a lot to say about that. Yeah, or Hard as well. But yeah, so we are built on Quorum. So we are EVM based. We allow our clients to transact in US dollars, euros, across major locations around the world. So one of the typical use cases is a treasurer. So he would have accounts in, say, bank accounts in Singapore, in Hong Kong, in London, in New York. So all of these are in different time zones. So if you look at the more traditional way of doing treasury management, you have this concept of follow the sun. Essentially, everyone works within the daytime, and then they hand it off to the next location in a way at sunset, you know, and the next location continues on. But with our platform, so essentially we allow for real-time 24/7 transactions. So that completely changed the model of how treasurers think about payments, because now you have instant access to liquidity anywhere around the world. So that was quite interesting. Another big thing that we did was programmability, essentially allowing our clients to deploy certain set of logic within our platform itself. Probably what you would usually think of as smart contracts, the idea that clients can write certain set of logic or code, deploy it within our system, and then it just runs as and when it's needed. So this ties in very much with the whole 24/7 kind of value proposition, because usually we think of it as like, you know, so on a system perspective, we're able to go 24/7, but from an operations perspective, parties are always still have to work. So the idea around automation is that parties are now able to build those logic, run it within the system, and then it can just continuously run. And yeah.
Awesome, thank you. I think so from, I guess, the enterprise side, let's go maybe a little bit on the CBDC side. Sophia, you know, Kaleido has worked on blockchain initiatives globally. How does Ethereum-based solutions support CBDCs like those in Brazil and Australia?
Sure. Well, I'll just add that Wiki was at MAS, and I think you were part of the team that first even came up with the term CBDCs way back when. So, yeah, as Kaleido provides this enterprise-grade infrastructure, we're actually working with over 15 central banks in different initiatives. What's really interesting, I think, from an Ethereum lens, because we offer all the different protocol options that enterprises might want to use, is really predominant focus on EVM-based solutions. For example, Drex that Bruno was talking about chose Besu a number of years ago. So now you have the whole Drexification of Brazil with hundreds of banks involved, and they're all looking at EVM and Besu for what they're doing with asset tokenization. You mentioned also Daniel Australia. We've worked with them with a number of projects going back years, like syndicated loans was the first project with the Australian banks and central banks, Project Atom, and then more recently there was a whole ecosystem pilot, 150 companies applied to participate. We were the basis of an innovation platform using EVM and middleware such as Firefly from Linux Foundation, that one of the many code repos that sits under his purview there. And it was really great because they put out this call on this innovation platform and said, hey, retail, wholesale CBDCs, bring your ideas, concepts. There were very large multinational players like MasterCard who participated. There were all of the banks participated with really interesting use cases, but also some startups actually launched their businesses on the back of this pilot. And then the way, obviously when you're dealing with the future of money, central banks are very thoughtful about how they're doing their POCs and pilots. So there's really great reports coming out of some of these. The analysis of the use case, a lot of times they might even have workflows, like Swift Phase 2 has a lot of details for each of the use cases they examine. So I think Ethereum, we're seeing predominantly, we're working with central banks in the Middle East, different parts of Asia, like Hong Kong, HKMA has done a number of pilots and work there. Other Southeast Asian central banks, even European, we're involved with the ECB digital euro trials with some exchanges and CSDs, and it's cross-border. Obviously, with the, Europe trigger mechanism, different payments. So there's a lot of innovation happening on Ethereum. And there's a couple reasons why. I think people really like the programmability. They want to do atomic settlement on chain. And there have been some trade-offs when people were, maybe looking to go into production in a highly regulated space. They might have had to do a trade-off where there was like a notary or trusted party. But now with an announcement last week in a new open source code base, Paladin, you can actually get programmable privacy in a decentralized Ethereum network. So that's very exciting for composable finance, institutional DeFi.
Awesome, thank you. I guess for you, Hart, could you introduce us a little bit more about the Linux Foundation Decentralized Trust, and could you provide its overview, particularly in the context of EVM-compatible environments?
Absolutely. So who's here is familiar with Linux? I hope a lot of people. Who knows the Linux Foundation and how the Linux Foundation works? Some people? Okay, great. So the Linux Foundation is designed to be a neutral home for open source code. The Linux Foundation solves the problem that if you have multiple people or companies or entities that want to come together and develop in the open, then they can do that in the Linux Foundation even if they don't fully trust one another. So it's a sort of concept of decentralized development. So I usually find that blockchain people, pick this up and the need for it relatively quickly. So we have over 1,000 projects in the Linux Foundation at this point. We keep getting tons and tons of code. You probably know many of them, like the kernel. Maybe you know Kubernetes if you do any kind of cloud development or deployments. A lot of the world's telecom stack runs on LF projects. More fun and interesting things like the Academy Software Foundation, which does all of the movie software editing. It goes in Hollywood. So, we all probably use, dozens of projects in things we do every day and don't even know it. But we do have a number of projects in the blockchain space and particularly in the Ethereum space. And we recently, put together an umbrella called the Linux Foundation Decentralized Trust, where we host, sort of all of our projects in decentralized technology space. And this is, just for sort of administration. When at the LF we get a lot of projects, we like to group them together. So we have a number of projects here that are Ethereum or Ethereum-based. Many of you may be familiar with Besu, which obviously sits in the Linux Foundation. Others, we have tools like Firefly, Sophia mentioned, and Cacti, which are very frequently used in various Ethereum applications. Maybe some of you have used Web3j to set up an Ethereum deployment. So we have lots of interesting Ethereum projects in the Linux Foundation. And our goal is to be that home for open, neutral governance.
Awesome, thank you. And I guess back to you, Sophia. Privacy is a critical concern in EVM environments. With the Paladin solution recently made open source at the Linux Foundation Decentralized Trust, how could Kaleido leverage this to address privacy challenges and enhance confidentiality in the projects?
Thanks. I'm going to change the answer a little bit to just how can everyone leverage this, because it's open source, open governance, open development. I'm going to tag on to Hart's description. I actually heard Jim Zenlin speak, who leads the Linux Foundation, and he said 80% of all the open source code used in production by enterprises sits under the Linux Foundation. So it's like a clean licensing model, and it's going to be an open community. There's no cost to participate, so any developer here can just contribute to it, join the Discord, pull the code down, etc. So in terms of privacy, one thing I wanted to start with is just privacy can mean different things. And maybe like an Ethereum mainnet setting and front running or what people are trying to do there. In an enterprise setting, it's really over the years, the needs have been around confidentiality. So if I give Wiki $1 million, Hart shouldn't be able to see any of these details. And then anonymity, he shouldn't even know that there was a transaction between us. And then history masking, where no one can sort of reverse engineer the data, the patterns to know that, their transaction provenance or any of the details of the entities, et cetera. So then there's been various techniques you know, in Tessera, as which part of the Quorum code base, and we'd work very closely with the Quorum team. It was the first EVM production code base, and a lot of enterprises went into production on that. But there were, you know, some things that Tessera couldn't do, like around private token transfers. So this new code base is like really the next generation of Tessera, and then adds zero-knowledge proofs, and then also adds sort of a trusted issuer model as well. So there's different patterns of deployment depending on if you want to be like fully decentralized, or if, you know, you could be really a network like a SWIFT who's moving into still being a trusted party, but now bridging between digital assets, CBDCs, and then that business relationship or network might, you know, want to have someone in that role. So it's very, very flexible. We did announce last week, and Wiki and Hart were both there. We were, as Kaleido, running Project Guardian Wholesale Network, which had a number of banks involved, like Citi, Standard Chartered, HSBC, and asset managers like Schroeder, some of the Southeast Asian banks as well. And it's a very exciting project that used the programmable privacy, because what they really wanted to do was really the first instantiation of institutional DeFi, where you have true composability and composable finance at the smart contract level across tokenized cash, the bonds in repos, and then funds in asset and wealth management. But then layering, you know, being able to do that with the privacy, which has eluded people, or there's been compromises that weren't acceptable to some of these ecosystem projects we work with. Like, for example, you know, Drex in Brazil, this is an example of one central bank. We've worked with others as well. They say, hey, if our nodes are down, we still want transaction finality, and we don't want to be playing this special trusted issuer role. So I encourage everyone who's technical to take a look at Paladin, or, you know, come talk to us afterwards. But there'll be a lot of, we did an in-person workshop last week, and different workshops coming to you, and webinars and things to just kickstart more involvement. We've had great input from partners like Wiki, JPM, and others over the last 6 months, just in terms of forming the community and bringing it forward.
Great, thank you. And I'll send this over to you, Wiki. So Sophia briefly mentioned that you actually were part of the Monetary Authority of Singapore. I'm curious, from your previous experience there, how do you see CBDCs evolving, and what role would EVM solutions play as part of those core stacks for these digital currencies?
Got it. So yeah, maybe just quick history. So I used to be at the Monetary Authority of Singapore. I was there for about 6 years, leading CBDC projects. So we were probably one of the earliest central banks to be working on CBDCs back in 2016, started working with Kaleido and lots of different partners back then. So I was also working on Project Damba at the BIS Innovation Hub. That was on multi-CBDC. I do feel that, you know, ultimately when we talk about blockchain, why is it so interesting for us? Because from a public Ethereum perspective, the value is probably much clearer. So why are enterprises interested in blockchain? A large part of it is really in terms of how governance actually works. So if you think about multi-CBDCs, for example, or generally any multi-currency platform, if you have currency issued by individual parties, so CBDC is probably the easiest to explain. You have Sing dollar issued by MAS, you have you know, Australian dollars issued by the Reserve Bank of Australia. So how do they actually issue on a common platform? Now, in a more traditional infrastructure, you have to have a single stack. Essentially, there's a single platform, and you always have this question, who owns and operates the platform? Now, blockchain is really interesting for us because it kind of provide a technical solution to this governance problem. The ability for us to actually run it as a multi-party shared ledger, that to me is the most interesting part of it. So there are a lot of other projects that we are continuing to pursue. One of it is just generally within the banks, now we are also starting to see very much like what, you know, within the public Ethereum, where you see value, the idea that anyone could be developing applications. Applications can very seamlessly interact with each other. We are seeing the same within enterprise blockchain itself. So the idea that, you know, from a JP Morgan perspective, we provide payment services, or we are working with Partior to provide payment services. We could have another bank doing security settlement. How could we actually deploy that on a common platform? The various different applications being able to interact with each other that allow us to do really cool things like DVP is really just the start. But what if I am trying to buy a securities in US dollars, but I don't have US dollars, I only have euros? Could I do essentially what is like a DVP VP, exchange my euros for US dollars, and then using that US dollars to buy those securities all in a single atomic transaction. So I think that is actually getting a lot of interest from an enterprise perspective, because we see that this is going to allow for much more seamless transaction processing and also help to reduce settlement risk as well.
Okay, thank you. Hart, privacy is a significant concern in the EVM environments, particularly for institutional use. Through the work that you're doing at the Linux Foundation Decentralized Trust, could you discuss the specific challenges related to maintaining privacy in high throughput environments and ensuring composability while preserving data confidentiality?
Absolutely. Enterprises and everyone, when they want a blockchain system, they want it all, right? They want privacy, they want security, they want scalability, they want decentralization. Many of you have probably heard of the blockchain trilemma, which says you can't have all of these at once. But we do see a push where people say, hey, if you can give me this privacy model and you can give me this level of performance, I can run this in a decentralized way on a blockchain. And I think that's really exciting. So we've seen a lot of advancements in things like ZK proving systems, which are really getting us closer and closer. If any of you are out there working on that, that's fantastic. I'm really excited about all the work going on there. But really, it comes down to, for businesses and finance, really defining the privacy model. And a lot of businesses and enterprises don't really know what they want in terms of privacy. They say they want privacy, but you have to get them to define it. And once you get them to define it, then you can start applying, cryptographic techniques. And, I think ZKP techniques are going to eventually sort of be the dominant technique people use for privacy in the future.
Great, thank you. Wiki, JP Morgan has been involved in projects like Project Guardian and Global Layer 1. How do you see blockchain, specifically EVM, unlocking innovative business models and enhancing efficiency in financial services? You mentioned it a little bit at the end of your answer, but maybe you can expand on that.
Yeah. So back to this idea, where I talk about a much more integrated financial ecosystem. Now, if we were to have that, we need to essentially have a blockchain platform that all the banks are able to deploy their applications on. Now, of course, in a very ideal world, you would say there's public Ethereum. Why don't banks just use public Ethereum? We do continue to face some of these governance considerations, because from a bank's perspective, anytime we are trying to use any technology, just even as a very simple example, if we were to try to use cloud services, from a regulator perspective, you'll ask us around questions around like outsourcing. Who are you outsourcing to? Who's going to enforce the SLA? What is the kind of recovery time that they are guaranteeing you? So those are some of the questions. And then there's also all the other questions relating to technology, risk management, SLAs. So of course, from a public Ethereum perspective, most of you will probably think like, oh, those questions are probably not so relevant. But from an enterprise blockchain perspective, those questions are very relevant to us, because we can only use the platform if we are able to answer those questions. So in the absence of being able to answer those questions using public Ethereum, for example, what we are trying to do is essentially banks coming together to say, hey, why don't we operate a private instance of, something like an Ethereum that we can then all use and we can then all deploy our applications on. So from our perspective, the idea is really a blockchain that is operated by financial institutions for financial institutions. Definitely it's not going to be as open as public Ethereum, but we do think that there's a middle ground where essentially, with a right set of rule books, with a right set of onboarding criteria, it can still be open and accessible to all banks who are able to fulfill the minimum criteria. So that to us is probably the best that we can push in terms of having an open and accessible blockchain network. So just to name the project, that's actually what the banks are working on, called Global Layer 1, essentially trying to build and operate a blockchain network that we are able to use.
Awesome, thank you. And Sophia, Kaleido has been contributing to initiatives like like Project Guardian to leverage DeFi principles for cross-border transactions and securities. Can you expand on that?
Yeah, and maybe I'll do an advertisement for the next panel because we might be transitioning to them. I think Bruno had a good slide where he showed there's new financial networks that are being built, and global layer 1 or the Guardian wholesale network. There are examples of those, and there's brand new types of networks. There's people like Swift who've done. We ran with over 38 banks that they connected cross-border with asset and cash networks over 4 different use cases for FX and trade finance and DVP. So there's a lot of interesting work happening on the network side, or you see payment processors like MasterCard was also on Bruno's slide. Then you also see banks like JP Morgan and others looking at asset tokenization, and they just want to be able to launch their assets at all these different types of new networks and really get liquidity. You get the global uniqueness with Ethereum, obviously, with the asset types, and you can get this composability even across networks. So what's interesting in the next panel we'll talk about more is there's these new unified ledger approaches, like the Bank of International Settlements is leading, and there's one in production called Enbridge in this region of the world that's been very exciting. There's private initiatives like Partior, which JP Morgan Wiki mentioned, who are also trying to do like sort of a unified ledger for FX. And then you have many other variants. So I do think composability across these networks, because there's different reasons and motivations for different geographies or different groups to come together, but you still need that open, interoperable composability across all of those. So I think it is a very exciting time for Ethereum. And you have all the way from the M0, M1, like future of money is changing. And the countries who do that well and faster, they're going to have a competitive advantage versus the ones who stay behind. So I think it's going to be a very dynamic space in the next 5 years.
Awesome. I think just to wrap it up, I want to shift a little bit towards the future. So Hart, you mentioned that you guys also are working on quantum-proof cryptography and future-proofing the EVM. With the advancements in quantum computing, there's a growing focus on developing quantum-resistant cryptographic methods. From your perspective, how would you see quantum-proof cryptography shaping the future of EVM-based platforms? And what steps can the industry take to ensure long-term security?
Yeah, this is a great question. We don't know when quantum computers are going to be able to do things like factor RSA 2048. I don't think there are any quantum physicists in the room. Maybe someone will be here, but so I'm not a physicist, so I don't know either. But the immediate thing to do is if you're storing data on a blockchain in an encrypted form, you need to think about taking action soon. Has anyone heard of this harvest now, decrypt later problem that goes in some people? That's great. So the basic idea is it's on the internet, and especially on a blockchain, if you're sending encrypted data across the internet or storing it on a blockchain, someone is recording that, and it's around forever, right? Particularly on a blockchain, right? This isn't a super common public Ethereum application because space is expensive, but particularly in more enterprise or finance settings, people are willing to post encrypted information on blockchains. And in this case, well, if you have data on a blockchain, right, and someone comes along 10 years later with a quantum computer, and that data is encrypted with, a quantum insecure crypto system, which if you put it on the blockchain today, you're probably using some step that's quantum insecure, then they can decrypt that data, right? And if you needed that data to be secure for, say, 10 years or longer, you have a problem, right? So the most immediate thing to do for quantum security is to assess if you're posting any encrypted data on chain or sending it across the internet in any kind of way that uses public key cryptography. And if you are, think about how long you need that data to be secure, when you think a quantum computer might be around, and adjust your crypto systems to something post-quantum accordingly. From the EVM, the EVM itself doesn't use any encrypted data, right? The big thing is digital signatures. So there's already, a relatively flexible signature protocol in the EVM specs. So that's great, but we will need to transition to post-quantum signatures, and that will be a little bit frustrating because the key and the signature sizes can be substantially larger, something like 8 to 10 times. So we're going to have to think about that with respect to, you know, available space on a blockchain.
Thank you so much. I think that wraps up our panel. I'll hand it off to Bruno to introduce the next panel. Thank you guys so much.
Thanks. And we'll be around if you have any questions.
Amazing. Thank you, guys. It was an excellent first panel. For the next one, I'm going to highlight some case studies, some companies that are already building these next-gen rails that are blockchain-based and EVM compatible. So I'm going to call Susanna from which the lead of blockchain strategy for a World Food Program at the United Nations to moderate the panel. Also, Abhinav from Partior, which is one of the companies that was mentioned during the first panel. Also, Italo Borsato, which the lead product lead at BIS, the Banking for International Settlement in Hong Kong, has been spearheading many projects there with a lot of banks and central banks. And Bruno Moniz as well from Interbank, a Brazilian bank that's been working around solutions, blockchain-based solutions on top of Drex, the Brazilian CBDC.
Okay. So, hello everyone. I will start by presenting myself very fast and say a few words that I think are relevant. As Bruno said, I work at WFP, UN, working as blockchain lead. I will not talk about that, but if you want to see more about the work that we do, like disbursing money for vulnerable population, tracked by blockchain, there is a panel, there is a session on Friday, and that I will speak, and I hope you'll be there. But I want to talk a bit about the work that I was doing before this work. I joined WFP 3 years ago. Before I was working for 14 years on Brazilian Development Bank. In there, we created, in 2017, we were exploring, we were launching a token to track the disbursements of the bank. And that time, it was not, the people in the bank was not comfortable on using public Ethereum. We are in 2017, right? And then we decided to create, as a development bank, we also decided to create a Brazilian network. And what I want to show you is that at that time, enterprise blockchain was really, really strong. And there was a kind of a huge discussion in the community which platform should we use. And there was a huge lobby for using no Ethereum ones. But at that time, we would already think, we are already thinking that it would make sense to us to be in open source, to be like in a public permissionless network, because we would imagine that these things that we are discussing today are relevant. So we would imagine that we want to be compatible with the things that we are discussing today and all the development that the Ethereum community is doing. And maybe in the future, we would maybe even be in Ethereum again. So I'm very happy that we made that decision. The same decision was actually made by the Brazilian Central Bank as well. So both networks are now created on Besu. That's also Linux Foundation. And that's, yeah, I feel like very connected with this panel because of this. Having said that, I will stop talking and I will start asking. So Italo, Bruno, and Abi, please, like 2 sentences to introduce yourself.
My name is Italo Borsato. I work at the BIS. BIS is the Bank for International Settlements. It's the bank for the central banks, people call like that. I came from the Web3 space, and I joined it recently, a year and a half ago, the BIS. And I'm an enthusiast on blockchain and decentralized identity. Yeah.
Okay, my name is Bruno Moniz. I'm a blockchain engineer at Inter. Inter is one of the most innovative banks in Brazil, and we work with a big super app that have like shop, e-commerce, and non-financial apps. It's a lot of stuff. We launched the social media in the same app. So we strongly believe in the Vitalik's pathway, you know, the financial and non-financial apps. So we're trying to build these stuffs. And we are also working with some international initiatives on CBDCs and on the DREX. I know someone here heard about DREX and know what is the DREX. So you definitely need to know more about this stuff. So if you're looking to build on-chain stuffs, you definitely need to meet the Brazilian CBDC project. We are doing an incredible framework for build on-chain stuffs here.
Yeah, hi, good afternoon. I'm Abhinav. I lead the client solutions and pre-sales for Partier. I think previous panel actually talked about Partier a lot. I think what we do is fundamentally we provide a shared ledger infrastructure for banks to be able to do real-time payments and settlement. And it can be for any type of payment. It can be for a commercial payment. It can be for FX payment or for a security settlement. So I think that's what we do. From a background perspective, I'm not a technologist like Web3. I've been always working with the traditional banks. I've been a kind of a payment enthusiast, work with those to figure out how we can transform their payment journey for the banks, and that's from where I came from. And then I decided to join Partier because I see that we can do actually disrupt the payments business.
Amazing. Thank you so much. I will start with Italo. So Italo, can you explain, first of all, what BIS Innovation Hub is, what projects you are working there, or you are being involved in the past, and how it is advancing the infrastructure of payments?
Okay, so like I said, the BIS is the bank for the central bank. It is an institution that was created by the central banks after the World War, and it is maintained by more than 63 central banks around the world. And a few years ago, 5 years ago to be more exact, they decided to launch this initiative, the Innovation Hub. So they launched six centers around the world. I'm working in the one in Hong Kong. Basically what it does is to experiment new technologies and deliver that as a public good for the central banks. All the projects are, we try to keep them in the experimental phase, so they are usually POCs and prototypes. But you see, if you read the reports, and it's more than 40 projects so far, I mean, between all the centers, you see a lot of concepts from the DeFi space, Web3, blockchain, DLT technologies, right? You see a lot of that, but always from the perspective adding the regulations, stronger governance in everything. So it's interesting to take a look. And a lot of them focusing on CBDCs. That's what I do also in the Hong Kong Center. So there are projects like Dynamo, mBridge, Genesis, Safe, Aperta, all of them using new technologies for the central banks. Yeah.
Thanks. Okay, so Abby, please, can you provide an overview about the company Partier mission and how it emerged from Project Ubin? It's good that you explain the project as well, of course. And it would be nice if you could comment how it relates with the BIS.
Yeah, so I think Italo mentioned about the fact is that from a central bank perspective, they do a lot of projects, and I think for right reason for industry to move, and that's where kind of Partier was formed. Partier Genesis is Project Ubin. This is a Central Bank of Singapore initiative. We started way back in 2016, where they want to kind of assess the blockchain technology on how it can solve the inefficiencies with the cross-border payment space. And they did a variety of use cases around that, whether it's for FX payments, securities, and everything else. And this whole project journey went for around 5 years. And when it was done with over 20 plus financial institutions, everybody liked the idea, but somebody has to commercialize it. Being a central bank, they can't commercialize it. And that's where Temasek, which is a sovereign wealth fund of Singapore, JP Morgan and DBS decided to commercialize it. And in 2021, October, that's where the Partier was formed or born, right? Now we are business live. I think it is no more in the POC or experimentation stage. We went live last year, November, and till date, we have processed more than 1 billion worth value of transaction. It is still a small scale, but I think being a blockchain infrastructure, it is still a good to start with, I think so. And we are processing real transactions, right? And I think fundamentally from our perspective, what we want to provide is a better infrastructure to the banks. And typically, if you see right now, the whole money movement happens is every bank have their own siloed ledger. And the money moves very sequentially across different blockchain, across different ledgers. And that is where the issue lies in terms of cost and speed. So that is what we are trying to solve with bringing a shared ledger infrastructure. Second key pain point, what we are trying to solve is right now when the money movement happens, it is happening in a very discrete, first the information moves and then the value moves. How we can have a unified messaging and settlement infrastructure which helps to avoid all the reconciliation which needs to be done across different financial institutions. And finally is that the current bank's infrastructure being so legacy, this is only so much you can do with that. You can't innovate much. And I think Vicky talked about some new instruments, whether it is FX swaps, intraday FX swaps, repos. I think those instruments you need to build, you need to kind of use a better infrastructure. And this is where kind of Partier comes in and brings all those technologies element to it. I think 3-4 things I want to just call it out broadly is what is something which I see my clients specifically are very interested is about 4 things. One is digital. Second is what they call about programmable. Third, they talk about multi-asset. And fourth, they talk about shared ledger. And I'll just spend a minute about each of them. What does it mean? So when we say digital, right, I think we talked about multiple digital assets are coming in right now, right? Whether it's tokenized bonds, tokenized money market funds, everything is there. But there is a need for a digital cash. You know, you need digital cash to be able to settle instantly and atomic those digital assets. And this is where kind of Partier kind of brings in the whole angle of tokenizing cash on chain using the commercial bank money. You know, and if you see right now, most of the wholesale institution, the wholesale banking works on commercial bank money. So that's what is a digital is. Second, programmability, I think Vicky talked about, that is something which is very, very exciting because we see new use cases coming around that, specifically for corporates, on how they can manage their cash concentration structures, which is basically moving more on a real-time base versus the end-of-day movement. That's second. Third is multi-asset. I think this is where the global liquidity pool comes into play. Because now with this, the market players have an option to choose which asset they want to use to settle their payment obligation and not dependent on the financial market infrastructure operating hours or the settlement cycles. So this is where it becomes a single pool of liquidity. And finally, the shared ledger. I think we want to be on a shared layered infrastructure which helps to kind of settle instantly.
Thank you. Okay, so coming now to Bruno, and talking about collaboration. I like you talk about the DREX. So I wanted to that you explain that Interbank, you are involved with the Brazilian Central Bank, that's DREX, but also with the Hong Kong Monetary Authority, right? In the project called Ensemble, right? So yeah, please explain the project. And also explain how do you think these collaborations shape the future of CBDC, especially regarding cross-border interoperability and real-time settlements.
Okay, first I'm going to explain a little bit about the DREX, the Brazilian CBDC, and then how the system connect to the Ensemble and all those things. First, the Brazilian CBDC is an Ethereum private network. So we have like 16 participants and every institution needs to run a node, so it's a decentralized one. It's not I know when I say decentralized network in Ethereum CBDC, everyone, I got the attention of everyone here. But okay, so we have the smart settlement layer and it looks like Ethereum. And then we need to build the protocols and the core assets, the wholesale currency, the retail currency and all those stuffs. And we are building in smart contracts. And for now, we are dealing with the private solution because Ethereum is so transparent, and we need privacy for the users. To the bank system need to protect the users against if I have your bank account, I don't know all transactions that you have done. So we need to do those things on chain. And for now, DREX is dealing with those challenges. And the Ensemble project, it's innovative initiative to test infrastructure for the financial market. And imagine that we are going to have different CBDCs, and for now we have the opportunity to reshape the paths to the business workflows and for the technology. Because for now we have a lot of standards, but in the national infrastructure, we already have a lot of different systems and a lot of payment systems. It's confused, and when you go like to an international environment, it's more complex than that. Okay, we have standards, but we don't have like digital native standards, and now we're having the opportunity to shape those things. And with the HKMA and the Assemble project, we are going to test the trade finance business cycle. You know, the trade finance is like when you know buying or selling a commodity, and the seller when I sell some commodity, I want the money right now. You know, I already made the ship, so you're going to receive by 3 to 9 months, but you're buying. You only want to pay when the commodity got delivered to your country. So the trade finance is like it's when a bank is going to pay the seller to receive to send the commodity, and then he's just financing the whole system and providing liquidity. So we have a chance to increase the liquidity and also to use EOT and a lot of connections to make the system work better. You know, because you don't need to pay all the commodity when you're in the first day. We can just track the ship, and when the ship advances, I can pay and do those things all chain and using this trust machine to run all the cycle, and Assemble is more about that. It's a proof of concept project, so we're not doing with we are trying to create something that is going to beat the production, but we're dealing with more academic research. Yes.
Thank you. So coming back to you, Italo, can you explain a bit more, like what are the insights that have emerged from the projects to facilitate cross-border payments using multi-CBDC platforms, and how it is reshaping cross-border payments?
Yeah, usually in cross-border, the way things, money moves, right? You need institutions that have bank accounts with each other around the world. So if you want to transact between countries, there is always a correspondent bank, we call, which has these accounts in both countries. Of course, they do a lot of services also, like checking the reason for that transaction and all the documents that are surrounding that, like invoices and what is the type of transaction to avoid money laundering and terrorism actions, right? So sometimes we forget that. And usually if you live in a country where the currency has liquidity with other pairs that you want to transact, it's easy because it's more instant. You have more options of correspondent banks that will deal with these transactions. But if you are in a country, a small country, and you want to do the same, it will be a nightmare. You spend a lot of time. You can have platforms like Partial that help that, but I mean, I imagine you have a lot of currencies, but there will be countries where you are not there, right? And with the CBDC in the cross-border, what happens is we don't know yet how it will behave, right? But if you have a tokenized version of the CBDC, and then comes a difference from the money from the banks, I don't want to spend much time, but the CBDC is considered a legal tender, like cash, like bank notes, different from the money that is in your balance in your account in the bank. That is we call M1. This is something good that the banks do because you can have more M1 in the market and it brings liquidity. But at the same time, if you want to achieve the settlement, the settlement finality we call, in a transaction, you need to wait for the end of the day in one country when the RTGS of that country, that jurisdictions, updates the balance of each one of these commercial banks. And this is something that even if you see the money transacting in a SWIFT transaction, for example, they wait for this time to guarantee the settlement, right? And if you go to higher values, you need to be careful with that, and then you need more trust on the system that you are using. And with the CBDCs, what will happen is it doesn't matter if it's in a single ledger or if it will be multiple ledgers using mechanisms to like, for example, HTLC to lock some amount here and implement an atomic settlement in all the networks. What really matters is that you will have atomicity, and probably it will be not instantaneous, but I mean in seconds compared to what happens today. We have a few services that do that. If you go to Wise and Parsure, you can access services that will be instant, but you are relying and trusting in their bank accounts with the banks that they are using. So it doesn't mean that it's a bit different from the CBDC conceptually, and it affects at the end all the ecosystem. Yeah.
Thank you. So I want to go to EVM now. A bit more technical. I want to Partio understand how Partio is utilizing EVM-based infrastructure to unlock innovation in multi-currency cross-border payments, particularly in areas like liquidity management and real-time settlements.
Yeah, thank you. I think before I just want to kind of finish your thoughts, what you said about, I think clearly CBDC come as the most safest settlement asset. And I think this is where I don't think so it's more of a technology problem. It is more about how central bank sees it in terms of their access policies. You know, we still have a challenge of anybody in offshore institution be able to hold a domestic CBDC or other. So I think we need to solve that as well. But clearly what I see is the commercial bank money and central bank money, they have to be there, and that's the way the entire monetary framework is working on. And there are specific use cases where the need for a central bank money as well. So I think so that's why we don't call it out. But I think in terms of some of the use cases, I want to talk about. But before I take a step back on, we are dealing with banks, you know. And in the last panel, there was a discussion around when banks are so particular about the KYCs and regulations and compliance. So the way what we have done is we first of all focus some time to build a base infrastructure that helps to kind of tick off these boxes. You know, we use Quorum. I think in the last panel, Vicky also talked about Quorum. I think that helps to kind of been designed to support more of a private permission network, so which works for us. And it also gives an ability for us to run partition networks for each of the big banks who provide liquidity to their known participants. So that kind of ticks a box from a governance standpoint. Second key thing was privacy. I think we spoke a lot about the privacy, so I'll not go deep dive into that. We discussed about that. The third key thing is settlement finality. You know, from a bank's perspective, it was very key to see how do we get a deterministic finality and not a probabilistic finality, right? So that is where we are using the protocol, consensus protocol, which is IBFT. That helps to give us a deterministic finality on our side. And finally is access and governance, you know, and that is where using Ethereum EVM technology, it helps to kind of do that with Quorum. That has been kind of designed to support a permission mode capability. So I think this is where we kind of send up a good amount of time, at least a year or so, to build the platform as well as the rule book, and then we start building the products around that. So the first one was the cross-border payment. I think the way we have done is we use the smart contracts to automate the entire orchestration of the cross-border payment workflow. And that's what we have done with embedded pre-validation and pre-screening. You know, and what does it mean from a bank's perspective? It gives them a certainty, because it goes through the entire pre-validation and pre-screening first before the settlement happens, which becomes very immutable in state. So this is what we have done, the entire orchestration around that. And we also kind of build a capability called multi-settlement bank concept, which helps to kind of chain series of payments which are very earlier sequential. Basically, we're going to chain it and make it very settle in atomically in nature. So this is kind of a use case we have done from a cross-border payment use case. Second was on the FX payments versus payment. I think this is where the banks were very keen to work with us. This is, if you see right now, there is no instruments which kind of support a PVP arrangement. Yes, CLS, which is there, but they are not actually true PVP. They have their own, still their own settlement cycles. But this is where it gets more excited for emerging market currencies where you can settle on a PVP basis. And that helps to kind of unlock your collateral to be deploy on a better way. So I think this is some of the ones which we have done. And I can go on and on, but yeah.
Yeah, thank you, amazing. So coming to tokenization, to you, Bruno. So tokenization has been called the revolution for banks. And you love Drex. That's an amazing project. So with Drex, focus on tokenized assets like public bonds and real estate. How does Interbank plans to integrate tokenized assets into its services? And what benefits could this bring for retail customers and institutional investors?
Yes, great. Because we have like two problems with the democratization of the finance, and the first one I think is the tooling. The users don't have the tool to manage their funds or have access to different products, and the tokenization by tokenization we can create new products and make the ones that already exist even cheaper to the client, and having a settlement layer, a smart settlement layer where we can create official deposits and official digital products like credit, like the ID of your car, or maybe the property rights of your own house, and those things on a chain that the central bank and the whole system integrate with. You're going to create a lot of products. But like DeFi, imagine we can bring DeFi to real-world assets using the official CBDC. But the second phase is like, okay, now we have the tools. We can bring a lot of things from DeFi, but the tool is just so weird to use. And in DeFi and the public blockchains, we're having this issue. The experience is so fragmented, and it's hard to use crypto products. It's getting easier, yes. It's getting even better. We have a lot of products that integrate with different chains and different products. And in the financial landscape, we also have those problems. We have a lot of products, but the tooling is difficult. And this is where Inter comes, and we have a important super app, and we saw the power of integrate non-financial apps to financial apps, and how to really create value to the clients. Because for now, you can use your bank account to access investment, not only in a free way, but in an easy way, because you have artificial intelligence agent that can understand your expenses and understand what you can do and what you can't do, and how can I achieve my goals. If I want to buy a new house, how can I do those things? And this is not it's something that digital tokenization can improve, but the user experience is something that we can do with blockchain and without blockchain, but with blockchain is better.
Amazing. So yeah, continuing on tokenization, to you, Italo, now we want to know a bit more about BIS, how BIS is collaborating with the Hong Kong Monetary Authority on the initiatives like Project Ensemble, and how it will enable interbank settlement of tokenized assets.
Okay, so the Hong Kong Center is independent from HKMA. We are in the same building in Hong Kong, a beautiful building. So we cross with the team from the HKMA all the time. So there is this proximity. All the projects that we have there, of course, they are aligned. They know what we are executing. We discuss with them. But in the project Ensemble, the participation of the BIS is very minimal. We are only part of the architecture community that they built. Just adding, it's similar to Drax. They have multiple projects as well. It's not only the international trade. Yeah, they explore the tokenization of bonds and also in the cross-border scenario with green bonds specifically, they will try that. But yeah, many other types of settlements with not only payments, but with real-world assets in the middle. Yeah.
Amazing. I mean, I still have lots of questions, but I don't have time. So we'll need to finish now and come back to you, Bruno. Thank you.
Thank you.
Hello. Perfect. Thank you everyone for a great panel as well. Shifting gears here, I think we talked a lot about CBDCs, financial institutions, permission rails, and how this more regulated environment is evolving, right? But for a last panel, we're gonna invite some protocols, some solutions that are building on top of public blockchains. So we're gonna double click on this transition, kind of understand if there's a path from permissioned to permissionless. So I'm going to invite the panelists here that will cover this topic. So Kinen will be the moderator. Please feel free. Also, Thiago from Tansi will be joining us during the discussions. Luca Cosivi from, yeah, perfect. From Open Zeppelin will also be here, and Shuki Ma from Plume Network. So please feel free, and if you guys can start the panel with a round of introductions and then move to the juicy part. Thank you so much, guys. Have fun.
Thank you so much, Bruno. As always, about saving the best for the last. I know energy levels might be a bit low, so it's our job to deliver not just content, but a bit of spice in it. First and foremost, we'll get the standard stuff out of the way of introductions. I'll go first, and then I'll ask the panelists to give a 1-minute introduction of themselves, and also ask them a very interesting question. So besides introducing yourself, tell us what is the first cryptocurrency token that you bought for yourself. Okay, so you can think about that, recall the memory. I'll go first. So my name is Chinan. I lead Saison Capital. We are one of the few Asian financial institutions that have set up a dedicated digital asset investing arm. So we can invest not just in equity stuff, but we can actually directly invest in digital assets. Invested more than 50 early stage companies globally, and we also have a fund of funds mandate. The reason why I'm moderating this panel, other than having multiple friendly faces here, it's really because this divide between permissionless and permission is something that's really important, right? As we think about how do we scale, how do we get institutions on board. So I'm super excited to get folks to come on board. And maybe the clarification for that, it's what's the first token that you bought for, I mean, not for gas, right? I think that would be interesting. For me, it was actually Axie Infinity. This was in early 2020s. So GameFi was actually what brought me into Web3. Over to you. Thiago.
Hi guys, Jem, thank you. So my name is Thiago. I'm one of the co-founders of Tansi Network, and I'm currently heading Tansi Foundation. So Tansi is a decentralized protocol for fast-tracking the launching of fully decentralized networks. This is very generic and all, but actually what we do, our product is pretty much like a fully decentralized layer 1. You can think of Tansi as a RAS provider, but the very fundamental difference between what we do and RAS, traditional RAS provide is we offer in a fully decentralized and permissionless way, right? So Tansi is a protocol that leverages risk-taken assets to ensure the security for this decentralized network. So, oh, by the way, the token, right? Yeah. So, funny enough, the first token I ever bought was not Bitcoin. And what's funny also to hear from you, that was not the Bitcoin. I bought Solana. So I used to do I used to work in a hedge fund before. I did that 10 years in my life. And I started to my career in crypto actually working with some research in this hedge fund, right? And that was pretty much in the DeFi summer. And I needed to make the DeFi course, right? And back then, the gas fees were pretty expensive. So, and Solana was starting to get some traction. And I saw another ecosystem which was very, very interesting, and a lot of different applications were emerging there, and was very cheap. So my course would be way cheaper there. So of course nowadays we have a bunch of solutions that try to mitigate the cost fluctuations, right? That's actually one of the core features that Tencent enable as well in our decentralized networks. But yeah, that was the very first one, and then I bought some tokens in the Solana ecosystem.
Very cool. You should be very happy in the past 12 months. All right, over to you.
Yeah, thanks. So yeah, my name is Luca. I lead our ecosystem development efforts at OpenZeppelin. We build developer libraries and tooling. Maybe some of you have already imported OpenZeppelin contracts. I think to date, I was just checking, we've passed 7.5 trillion in total value transferred from people that use OpenZeppelin contracts, which is a statement of course, the scale of Ethereum and what has happened, but obviously the trust that people put into our libraries. We've built a lot of developer tooling, and we also do security audits in this space. We've recently audited Uniswap v4, which has some interesting properties for TradFi. And yeah, yeah, it was definitely Ether, my first token, but that's not memorable. I think the first one that I really remember was Dogecoin, so yeah, that's...
Awesome.
Hi everyone, this is Shuki. I'm the Chief Strategy Officer at Plume Network. So prior to joining the team here, I was the CMO and the founding team member of Polyhedra. So Polyhedra was basically my first crypto project, and I bought Bitcoin as my first cryptocurrency. And also the second one is Solana, because we were talking to Solana Foundation for the Zk Bridge integration, and I tried to figure out what happened and why it was like so hard to integrate, but yeah, it was the second currency. So about Plume, we are the RWA-focused blockchain, and we combine RWA assets on-chain with the DeFi strategies, and it's easier for the retail users and the global investors to access to more, I would say, investment products from TradFi world. Yep.
Got it. So none of us bought ETH, so I think that's the end of the panel. Well, no, I'm kidding. All right. So let's get to the meat of this, right? And I think before we get into the technologies and products, which I'm sure you guys have much to share, let's start off with something a bit more meta, a bit more philosophical. We have permissionless chains, TVLs that have grown to a $3 trillion market cap. And then we have the rise of these permission chains that are happening. We just heard from the likes of Drax, from Layer 1 Network and all. Directionally, where do you think we're headed? Are we headed towards one taking over the other? Are we heading towards both coexisting side by side, relatively same size? Kind of where will we be?
So that's a good question. I think and maybe I'm biased to answer that, considering that we are doing a lot of work in the app chain space at Tencent. So I think we are leading to this multi-chain world that we always kind of dream and spoke of, but in a way more integrated way, right? So today we are very sophisticated in aggregation layers. They're pumping, the bridging, and in general messaging protocols. I think that's stronger than ever. And also, I think that's very important to mention that we're probably going to see a way more institutionalized crypto market going forward, right? Which might change fundamentally many things. But probably is going to be giving more, making the market a little bit more rational, right? I think we're finally going to have models, investment models, and me being ex-TradFi guy, I pretty like it. But yeah, these are two of the main visions that I have from the next short term. Yeah, so for Plume side, we've been seeing a lot of
interesting institutional moves because we got a lot of, we're actually talking to a lot of people in the United States, in Singapore, in Hong Kong, and we noticed that a lot of I would say institutional partners think of us as the distribution channels, and also, you know, for some permission blockchain, like with the fully KYC one, they're using us as one of the distribution channel using our tool called Skylink. It's basically passing the yields back to the blockchain users with the more interoperable way, using the bridge, using the interoperability relayer network. So I've been seeing a lot of trends here, and I think for us, we are quite prepared for the trends here, and we have different tools, like including like Skylink. We also have the data highway, actually can onboard different out-of-refi assets with the Oracle from off-chain to on-chain. So yeah.
Yeah, I think from what we see is, yeah, definitely permissionless environments are getting more traction. I think we see DeFi catering towards TradFi. I think Uniswap V4 is a great example of that. We're now building a hooks library, so soon you'll be able to use OpenZeppelin hooks for V4 to have, let's say, a KYC check before someone does a trade. And I think we also see, you know, I think Kaleido has Paladin. We see Chainlink with their privacy manager that they just recently launched, which is part of their Swift integration. So I think we're seeing, you know, projects cater towards TradFi, but on these permissionless networks. So obviously, yeah, maybe governments will need to have more control, and they won't go there. But I think we're definitely very bullish on permissionless networks. I think we're seeing more also people like modifying the rollup stacks. I think Unichain is an example of that. So, you know, eventually you could imagine TradFi going there. I think for now they're very focused on like more simple use cases. That's what we're seeing at least. You know, launching stable coins, RWAs. So it's not, you know, DeFi is still like innovating and at the forefront, but you know, we're more and more catering towards TradFi, and I guess, yeah, eventually I think bringing more people that are in permission networks over to permissionless. Yeah.
Very cool. So it sounds like both will exist side by side, and there's already tools that are being built to connect them both. So maybe let's unpack that one layer deeper, right? It's like an onion. We try to get deeper and deeper each time. Let's really focus on privacy, which is sort of what the core topic that was built out. I always find that privacy has a bit of this irony or contradiction. On one hand, of course, you want your transactions to be private, right? Especially when it comes towards real-world applications. You don't want the whole world to know how much you have, what you're doing, and so there's already a bunch of privacy solutions. But on the other hand, you know, when it's talk about getting to the real world, the government doesn't really want it to be private, right? It wants it to be private until, let's say, something bad happens, then it sort of wants you to make it unprivate so that they can see who it is. So I would love to hear kind of from a product, from a technology standpoint, because each of you are solving this in very different ways, very different value propositions. How do you think about this privacy issue, especially in sort of a real world context where you want to be private on one hand, but then someone might knock on your door and say, oops, you know, can you not make it private? Let's make it public to me. So
I can start first. So from, you know, for such a long time, I've been talking to all of the banks and a lot of institutions about the ZK solutions when I work at, you know, Polyhedra. And I think, you know, for Plume, it's going to be the same, but it's going to be more flexible. So how we're fixing this like privacy preserving issue that we're facing for most of the, you know, institutional partners or, you know, required by MAS, HKMA, or other banks in the world is actually using the zero knowledge proof technology. I think it's actually the future because it can be selectively privacy preserving. So it can encrypt the message that you don't want to get revealed to the public, but you can also selectively, you know, open the key for the key, I would say, manager of the message. For example, like MAS, if they want to check on the message every time on the transactions, we can pass them the encryption key to them. So they have the key, they can open the message, they can check out what's happening there, but also for the banks itself, they can also check on the, you know, transactions. To most of the retail
sorry, let me just interrupt you right there. Who gets to decide who gets the key? Is it
So
Plume or is it the project?
I would say the project, because it's we're a permissionless chain, and we provide the tools for everyone, so we don't interfere, their development. But they get to choose, they get to choose the owners of the keys when they're doing this privacy preserving selection. And also on the other side for Plume, because we're permissionless, right? But we definitely don't want dirty money to come in, and we don't want, but on the other hand, we don't want people to do KYC all the time. And for the privacy issue, a part of that, we actually build this money laundering firewall. It's a chain level firewall. So for everyone, for every single cryptocurrency come into Plume, we make sure that it match with the AML standard globally, and also we have it paired with the privacy preserving key that can be selectively disclosed to the key partners in our blockchain ecosystem. Yep.
No, I totally agree with the ZK part. I think that's definitely part of the most advanced and the thing that comes close to what the institutions want to see. And I'm a big fan, by the way, of what you guys are building in that space. We at Tansy, we can cover a large number of use cases, right? And most of them are more degen use cases, DeFi use cases. But of course, we have also the institutions as well. I'm also from Brazil, and many panelists and speakers here today are from Brazil, and we are seeing a lot, as you guys already know, in the institutional space in Brazil. And that's a very, very recurring demand, right? So when it comes to Tansy, what we are looking for is pretty much incorporating the cutting edge ZK solutions to pretty much solve exactly what you're explaining right now. And yeah, couldn't agree more.
Yeah, I think what at least we're seeing is that, there's a lot of people that, obviously there's the cypherpunk values of privacy, and there's a fine line with that, with governments wanting to know what's going on, and people have to maybe pay their taxes or whatever. Sorry? Maybe. Yeah, maybe. But yeah, I think there's a tension there, right, between privacy, compliance, and yeah, I think that it's going to depend on where people are based. If the protocol's entity is in the US, right, they're going to have pressure and a tendency towards one side. If they're outside, that might change. So yeah, I think we're seeing a bit of everything. There's still people trying to push for full privacy, full cypherpunk values, and I think that might stand in some places. And I think we're trying to at least add to the library right now, the simple things, simple extensions to the ERC20 that will make it easier for institutions to deploy and be a little bit more, make it a little bit more compliant and easier to stay compliant. But yeah, I think there's still a tension there, and the full privacy rollups like Aztec are still not going to, still not launching anytime soon. So I think, yeah, we'll see what happens when they go live and you can actually have full privacy. But yeah,
Yeah, I think it's fascinating to see how this evolves, especially as we start to get to scale. Okay, so we checked off the privacy box. Let's talk about the interoperability segment. And once again, this is another one of these paradoxes or oxymorons, right? You have chains that are incentivizing, encouraging folks to build on my chain, right? I give you grants, I give you support, all of that. And at the same, so the idea of doing that is to get people to build on your chain. But at the same time, there are so many other chains out there that you need to sort of be interoperable with. And we all know, right? Startups, developers, there's just finite resources, finite time. So really curious to hear how you guys as leaders of your respective infrastructure companies are thinking about this, right? How do you, it's like on one hand, you want people to come in to build in your backyard, but at the same time, you want to make sure that they keep looking out at other people's backyards and maintain sort of that relevance, which the grass might always look greener on the other side. So yeah, I'm curious about how y'all think about this whole idea of really creating captive apps while figuring out interoperability.
Yeah, I can kick it off. So interoperability is definitely one of the key aspects for Tansy, right? So, and just a step back, talking a little bit more about our solution tech stack in general. So we tackle interoperability several ways, and also like we are only viable because of interoperability, right? So for start, Tansy, as I said, the purpose of our network is launch other networks, right? And we do that with a partnership recently announced with Symbiotic. And when I say networks, maybe you guys are more familiar to the concept AVS. So AVS was a term created by Eigenlayer, and Symbiotic uses networks. So just to make a parallel here. The operational system for restaking that we use in our solution is powered by Symbiotic, and that's first interoperability layer. Okay, once we have the operational system, we have to attract liquidity, right? And another protocol that we interoperate with is Renzo, because these are the guys who are routing the liquidity through the operational system in order to secure the chains that, not only Tansy chain, but also the chains that Tansy is putting together and launching, right? And that's in our tech stack. But then, of course, if you're going to launch many app chains, many networks, would be amazing, like if we could make these guys interoperate, right? So for doing that, we are integrating now with Eigenlayer, Polygon Eigenlayer, and Cycle Network. These are two of the leaders in this shared liquidity aspect. Sorry. So that's another aspect of interoperability. And last but not least, when you deploy your network with Tansy, we also have in our base layer native interoperability layer on which you can bridge assets, you can exchange messages, and that's all like without necessarily using any bridge. So you just use our tech stack and our kind of layer 0, so to say, and we provide this interoperability out of the box as well. And of course, we are integrated with the main bridges and GMPs in the market, such as Axelar, Wormhole, several of them. So I think definitely, as I was saying in the beginning, right? So that's definitely one of the directions that we are going. So multi-chain, whatever AVS, multi-network space. And of course, the interoperability is a key part. So we definitely need to solve that, not only for the developer, right? So improving the developer experience, but also for the user. It's not trivial to reach assets. So that's the main challenge, I would say, in that sense.
Yeah, I will be the next. So from the chain level, I will say EVM compatibility is the first thing for interoperability, because there are I would say there are a lot of DeFi protocols. They're pivoting to RWFi, RWA plus DeFi protocols into our space, and to be the EVM compatible chain makes it easier for the protocols to move or to transfer from, or to be multi-chain basically on Plume. And so that's going to be the first thing. And the second thing will be the interoperability between the off-chain data and the on-chain data. Because we are the RWA-focused chain, and we have a lot of, surprisingly, we have a lot of traditional builders or projects that actually want to deploy on Plume. So like they're asking for help because they don't understand blockchain. But what they can do here is using our tools, like we have the data highway to provide the Oracle solution, and we partner with the other third-party protocol Oracle provider, for example, like Chainlink, to help them to get on board. But with all of those like traditional builders or traditional projects, brands, IPs, they can actually onboard on Plume with Data Highway easily, because we have the interoperability from to provide for them from off-chain to on-chain. And the third thing is the thing that we're building on chain, the interoperable RWA yields. So which we can take in the assets from other chains, like for example, like Ethereum, of course, and some other like big layer 1 and layer 2s, we can take the assets from their chain and then deploy into our RWA staking pool. So their users stay on their chains, but at the same time they can get the RWA yields passed back from Plume to their chains. So that's also kind of like the yield liquidity pool that we're building for other chains too. Yeah.
Yeah, I think interop, I mean, if you're going to talks or you've been on like crypto Twitter over the past few weeks, you've seen it, I think, a big topic. Please be loud about it, whether that's complaining or building towards it. Like, I think for the sake of Ethereum, you know, we've scaled, it's amazing, we have all this block space, but it's quite messy if you've used a DEX or even just a wallet. It's not a good user experience, and I think as we merge with TradFi, we want to make sure that we are the better user experience. So, I mean, yeah, we have been working on a standard. We actually tried to introduce cross-chain into the Open Zeppelin contracts library more than a year ago. We had to deprecate it. It was very hard to keep up with all the roll-ups. We've actually just published a new standard, 7786, if you want to take a look at it. I know there's a lot of other standards out there. We're trying to gather. There are a lot of people meeting this week, and hopefully we can, you know, agree to a way forward when it comes to EVM yeah, messaging. Obviously, there's a lot of like interop providers like Chainlink, Wormhole, Axelar, Layer0, and some others. But I think it's important that we get to a standard. And I think in the previous panel, someone mentioned that like, yeah, the tooling and the user experience is not great. I think, yeah, it's because we have all these different providers. And so, yeah, I think it's definitely a big focus for us. You'll be able to, yeah, see the proposal we made. Eventually, that this will come into the library. Obviously, we're trying to make it so that, you know, it's a standard, it's vendor agnostic, and Open Zeppelin hopefully can act as that, you know, neutral place that people can go to. But at the same time, obviously, you know, there's interesting things that Chainlink provides with maybe a Swift integration, right? So we've tried to make it as, let's say, modular as possible so that you can use, if you want to still use Axelar, you still want to use Chainlink or any other bridge provider, you can, but really make it easy to just have interop in Ethereum. And I think, yeah, it's a big problem we want to solve, especially as new people come in, because you end up losing people to other X systems. So yeah, and actually we also worked hard to make it not only EVM to EVM focused, right? So we've aligned it to the chain agnostics improvement proposals, which basically try to look at non-EVMs as well. And as we've actually started expanding Open Zeppelin contracts outside of Solidity, we've tried to align our interop standard with that. So that should also help, I guess, with TradFi and maybe some permission chains that are not EVM. But yeah, I think that's big focus, yeah.
Very cool. So we're almost at time. So maybe in the last 1 minute or 2 minutes, what I would love is for each of the panelists to share how you can support the builders, the developers, the founders in this room to really, whether it's on permission or permissionless chains. I know you guys have already shared a bit, but maybe just in 30 seconds to 1 minute, share, you know, how each of your infrastructure, your blockchains can really support the audience here.
I can start. Yeah. So our holy grail is pretty much that we don't need to provide any support, right? Because it should be as smooth as possible in a way that no support is needed. Actually, all the framework that I described is codeless, right? So when you deploy your network with Tansy, it's pretty much like installing a software in your computer. So you just go next, you give some parameters, and that's it, right? So at the end of the process, which take about 10 minutes, you deploy your own chain, and this chain has already connectivity to wallets, block explorers, indexers, RPC endpoints, all of that, all the interoperability that we just described. And then, but you leverage risk-taken assets and like risk-taken liquidity as the means of security for a chain, right? So we are very, very focused on our documentation. So the idea is that if this very simple process that we establish is not enough, then you have a very robust documentation, because you know, if any of you guys here is working in a Web3 protocol, as much we talk a lot about interoperability, we talk a lot about how things should be, permissionless and everything, but the very first step of integrating is always, let's create a Telegram group, right? So, and that's, our idea is pretty much to, that this Telegram group is not necessary anymore. So that's how we see that. But of course, like, we are super happy to connect to the community always. That's just like a mantra we have in the product side. And yeah, we have different ways to interact. We are always open to chat and Telegram, Discord, whatever is the method. WhatsApp is very used in Brazil. Signal, you guys choose it. And yeah, happy to connect if anyone want to chat after this.
Yeah, I mean, something we've actually just made public. There's a new repo, if you go to GitHub, called Open Zeppelin Community Contracts. So, we're actually starting to make it easier for people to contribute to Open Zeppelin contracts. Obviously, the vanilla repo is, where it gets heavily audited and, that's production-ready code. But obviously, we want to make it easier for people to start building extensions to the library that maybe cater more towards TradFi. So, you can contribute there if you're a developer or see what's going on. And if not, yeah, we also have, a booth. We have a lot of our team here at DEF CON, so feel free to come up to us. We're really trying to focus on interop. We're also doing some stuff around the ERC 4337 and adding that to the library. But if you have some cool ideas around like compliance and privacy, we're always happy to hear. We're trying to, I don't think we have a clear path forward to what we add to the library. So yeah, we're still in a research phase there. But yeah, if you have any ideas there, I would love to talk to you.
Yep, for Plume, we have different tools. First of all, it's going to be our tokenization engine for all of the traditional or the crypto users to tokenize their assets easily on Plume by clicking a few buttons and you're going to tokenize the assets. It's very easy. And also we have the modular services that pair with the requirements of each protocols. For example, some of them might need support from the compliance side, from the KYC side, from the legal side. We all have the supports from there for them. And we also have the grant program. So we're giving out Plume grants. And if you're the RW5 builder, come talk to me. And we have over 180 ecosystem project building on Plume already. And they're live on testnet. And we're going to launch the mainnet very soon. It's going to be in a month. And also for the user growth, because I was the CMO at Polyhedra, I did the largest campaign at OKX Cryptopedia campaign. It was with over 100 million participations. So you can trust me on user growth campaign, and I'm going to lead the mainnet campaign for Plume. And we're going to have a lot of interesting showcases and like use cases for the RWA5 scenarios. So yeah, come talk to me if you want to be on Plume. Okay.
Forgot to mention we have grants too. So.
Free money, so grab these guys. All right, please join me in a warm round of applause to thank our panelists today, and thank you so much for your attention. Back to you, Bruno.
Well, we are almost wrapping up here, but still have a Q&A session. I'm going to invite Camila Rioja that going to lead this last panel. But Camila is going to also introduce herself and talk a little bit about what she's working on. But Camila, feel free. And then I'm going to invite the moderators and the panelists to stay here. So if the public has any questions, we're happy to take.
Thank you, Bruno, for the opportunity and everybody for being around. What a journey, right, so far. For those of you who don't know me just yet, my name is Camila Rioja. I am the founder and president of, wait a second. How are you doing it so far? Let me give it to the master because maybe it only replies to Bruno. But while he tries his best, my name is Camila Rioja. I am the founder and president of Plexus Institute. an institute focused in democratizing access to the benefits of emerging technology. I'm here to do a very quick intro on something we would love to collaborate on with you guys, and also make an invitation. So tomorrow, 6 p.m., we're going to be in the blue meeting room. This is an open space. If you're here in presence, you're going to see it. There's no way around it. And we're going to be discussing this open call to collab. This open call to collab, yes, we're almost there just when we need it. On a very interesting project, Plexus Institute signed a partnership agreement with a city hall. The city hall has one app. It's a Web2 app that has around 1.5 million people already onboarded. And they're using this app to have access to public services and to public goods. And they inquired us, how do we take the next step? How do we bring more benefits to the population based on emerging technology? What is the role that blockchain open source technology could bring to us? Upon this question, what we replied to them that the best thing that this type of technology could bring is the community. So what did we agree on? And we can move to the next step. Doing a partnership where we could invite the community to tip on what type of technology should be built, what type of use cases should be built. And they have a very particular interest in this aspect, which is community currencies. Brazil has over 170 community banks and community currencies that don't operate under the same rules as the traditional banks, but rather through legislation that is done on a community and municipal level. So it's an opportunity to experiment with other ways of lending money, of paying social benefits, and rewarding the population. On the next slide, where are we right now? So we conducted the first assessment on what this technology or the evolution of this Web 2 to Web 3 more connected to the individuals with popular governance could look like. And now we are on phase 2. We landed here with an open Q&A. If you would like to scan this QR code, we are asking you for feedback. What should a wallet provide for in the best ethos of our community? How should the individual's privacy be protected? What are the best governing rules of a community currency? What is the backing that is needed, and what type of economics should this initiative be focused and aimed at? After we are done analyzing these responses, they are going to become a public collaborative study. The municipality has agreed to host a pop-up city and do a regulatory sandbox so we can all explore with this opportunity, feeling safe in a very nice environment. So if this topic is of interest to you, please meet me and other fellow people 6 p.m. at the Blue Meeting Room. Without further ado, let's continue to our Q&A session. I would like to invite the moderators to take place here again with me. Maybe give them a round of applause just so they, feel excited of coming back here. Please, moderators, take your seats. Yes, we have the first courageous one. This woman is actually from the municipality that we signed a partnership agreement with. Yes, let's have Bruno back. We still have one chair. Who is the missing moderator? Yes. Amazing. So let's start with you, the audience. Does anybody have an interesting question to pose to this amazing group of people? Come on, it's been almost 2 hours. If you are here, you really like us. Can I start with her?
Well, my question is actually on the board behind you. It's a philosophical question, just given that we're quite a few years on from the Panama Papers and the end of Swiss banking secrecy, and so I'm curious what your thoughts are on the future of privacy in banking, especially given how the entire push of blockchain has been about transparency. Thank you.
Yeah, I will say from the banking level, because I'm not a banker, but from my experience talking to all of the banks, I think permission blockchain or permission messaging layer is a must, because you have to keep like the information safe within the banking system. But how it can break the boundary like between the permission blockchain and the public blockchain, for example, Plume, permissionless blockchain, how we can pass the yields or accept the assets from them is that basically the interoperability tool. So I would say the privacy should be strict, and that's how all of the banks can protect users' privacy and also can match with the requirements of SEC, MAS, HKMA. But I think on top of that, or like to pair with that, we have a lot of solutions in the blockchain space. Like for example, like Bridge, messaging layer, relay network. We have a lot of solutions that can actually bring the good assets to the blockchain, or actually get the information out from the blockchain. And also, I think like ZK Proof can be a very good solution because it can be selectively disclosed on any kind of information that you want to select and provide for the MAS or any kind of regulators. Yeah.
So happy to add on. So I think even before we go into the technology, just very much just from a regulatory perspective, or even just from a very general perspective, I think the view is that some information has to be kept private and confidential. So for example, in a lot of countries, you have like Banking Secrecy Act that looks at the preserving the confidentiality of this information. And even before that, just GDPR, for example, around privacy of personal identifiable information. So I think from that perspective, privacy is paramount. There is no, you can't even debate that. Yeah. So yeah, just from that perspective, I think you can't have any that there just really isn't any way else around privacy. Having said that, so from a technology perspective, there are really different means of dealing with this need for privacy, especially when it comes to personally identifiable information. The general approach is don't even think about storing it on blockchain, because like what Hart was mentioning earlier, the whole idea around store now, decrypt later, you could have it encrypted today, you have no idea what will happen to it 5 years, 10 years from now. So the general approach is PII, we wouldn't even think about storing on blockchain. The next level is really what sort of information do we need private, to keep private or confidential. Again, some of these things was mentioned earlier in terms of like, maybe certain information are market sensitive. If they are market sensitive, they might be sensitive for a couple of years. So from that perspective, you probably need to keep it secure for that number of years, while on the other hand, PII, they are pretty much confidential forever, which is why you wouldn't want to store them on blockchains. Yeah.
Oh, perfect. Now, just to complement a small detail, I think when you have like a regulator, a central bank, a regulatory authority, or any kind of financial regulator, sometimes there are issues that are beyond its mandate. So as Vicky mentioned, so we have GDPR, Bank Privacy Act. So a lot of those are legal frameworks, so they're like regulatory frameworks. So even the financial regulator cannot like move them. So it has to build and solve for these problems or for these frameworks that are already there as well.
So my add-on would be that I think like the future is complex, and I think it will be platforms in different levels of privacy. So I think there will be applications from different levels. But yeah, I think like in general terms, like the solutions that we will contract for banks or for similar things in the future, in general, there will be privacy. Yeah.
Awesome. So we also have a second question on the screen, but I also wanted to give the opportunity for the people who are in here. Anyone else?
It's a quick question. Wiki, would you ever consider, moving the JP Morgan chain as a roll-up on Optimism and joining the super chain or any other like roll-up stack? Have you gotten offers?
it will be back to what I mentioned earlier. You know, the question that we always have is, from a governance perspective, are we able to rely on the underlying technology itself? I mean, we are definitely looking at roll-ups because we see there's a lot of usefulness, partly from just a scalability perspective as well. But of course, when you think about L2s rolling up to L1s, then there's always a question of the governance structure of the L1 itself. So, I mean, you mentioned one of the networks, but if we could be thinking about any other of the public blockchains, we still have the same governance questions that we had. So actually, I just had this discussion with like a couple of tech folks, I think last week or the week before. So, you know, if we are not able to rely on the governance of deploying directly on L1s, the same would still apply. We wouldn't be able to rely on, you know, rolling up to that particular L1 itself. So that's just a high-level view around what we are able to and what we are not able to based on like current regulatory or current interpretation of regulations and the governance of these public blockchains.
So maybe to the second question that we have on the panel, what's the biggest potential risk of CBDC? For institutional banks, how would using a CBDC and a blockchain-based platform change the transaction fees, the traditional transaction fees for banks?
Okay, I will start with that. So broadly, I would say that we generally view CBDCs and commercial bank money as complementary. Abi over there, he can probably share a lot more from Patio perspective. But I'll just share from my own perspective of having seen it from both sides. So on the central bank side, I started working on multi-CBDC projects. Very quickly, we realized that we wouldn't, from a policy perspective, central banks doesn't want to widen access. So if they are not widening access, they always need commercial bank to act as an intermediary from, say, a KYC, AML controls perspective. And because of that, eventually the ledger become a two-tier ledger. You have CBDCs, you have commercial bank money. Now, if we look from the other perspective, which is from bottoms up, Patio perspective, we started with a commercial bank money, essentially like US dollar that are through JP Morgan as a settlement bank. But again, very soon you'll realize that from that perspective, you know, they're just, you always end up with the need for multiple settlement banks. So example is, let's say for example, Sing Dollar, you have DBS as a settlement bank for Sing Dollars. But what if one of those clients is not using DBS Bank, but using another of the local banks like UOB, for example? So then the question is, if you have multi-settlement banks, how do you enable settlement across these settlement banks? CBDCs again become a very natural solution to that. So we have seen it from both sides. The eventual landing point is really a two-tier kind of architecture on a common blockchain itself, where you have both CBDCs and commercial bank money. One of the biggest blockchain projects out there by central banks today, Project Agora, I think there's like 7 central banks and I think over 40 financial institutions. This is actually the specific use case that they are exploring, having both CBDCs and commercial bank money on a common platform and how we are able to use that to improve cross-border payments. So broadly speaking, I would say that they are complementary. We don't see a lot of competitive elements to it. We think that it will definitely make payments a lot more seamless, but I don't think it will significantly disrupt how payments is being done today.
Yeah, just to complement that, when you talk about CBDCs, there are like different versions of CBDC initiatives, and there are different dimensions as well. So Wiki was mentioning the international dimension, so cross-border CBDC rails, right, multi-CBDC arrangements, but also there are like countries such as the ones we mentioned in Brazil that are deploying infrastructure, blockchain-based infrastructure, that's thinking actually beyond payments, because a lot of those countries already have payment rails, instant payment rails, already have data with open finance and open banking. So they were like thinking what would be like the next chapter. So like creating an infrastructure, an ecosystem that can leverage emerging technologies such as blockchain and enable broader tokenization of economy. So we're talking in specific situations, specific CBDC initiatives, more about RWA, tokenization of securities, of financial assets, of the capital markets, not only like the payment side. Of course, the payment leg being like a deposit, tokenized deposit, or a CBDC for the wholesale side is very important for the DVP. But the asset part, I think, is the one that's being pushed, and is the actual goal in specific CBDC initiatives, mostly on the domestic level.
Unfortunately, we are running out of time, so I would kindly ask, maybe the two of you to say a few last words prior to us giving the word back to Bruno.
Oh, sure. So a little bit comments on that. So I think CBDC is a great way for cross-border payment. And also on top of that, we're talking to some of the project, like from Project Sample. They are actually figuring out how they can pass the yields back to the CBDC holders. So I think like partnering with maybe some blockchain partners can make it more flexible, globally. Yeah, just a little bit comments on that. Yeah.
Yeah, my final comments are related to financial inclusion. So we still have 1.4 billion people that are financially excluded. And if you look at the last 10 years, technology was a main driver that help a lot of people, not this 1.5, but not 1.4, but other people, to be financially included. So I truly believe that these new technologies are unlocking new possibilities to financially include people, either CBDCs, PIX in Brazil, or other ones. So I think it's good.
And on the other ones, once more the invitation to join us tomorrow, 6 p.m. for talking about the community currency that brings the possibility that builds upon what you think it should be the best avenue to bring goods for a population that it's awesome. Bruno, now handing back to you. In the name of everybody, I think we thank you for the opportunity to be here. Please, your final words.
Oh, perfect. Now, just want to thank everyone for spending the last 2 hours after 5 panels, like of an intense debate with us. And we are pretty open to have like some discussions after the panel. And I think I had an awesome time. Also want to thank all the panelists, many of them that flew to Bangkok to be here today and presenting to you. So, and thank you for the Ethereum Foundation and DevCon team, Skylar, Nathan, and all the gang for letting us have some fun with you guys for the past 2 hours. Was incredible. Thank you so much, you guys. Have a nice one, and I hope you enjoyed DevCon.